Hema from 3 Week of May, and I'll be introducing you all to this chapters on salary income. So let's talk about salaries. The first thing we need to know what needs to be considered as income from salaries. Like what is the basis of considering income from salaries? The first one, which is the most important, is an employer-employee relationship. So when you're receiving income from someone, for example, when you went for internships or any other income of that sort, that won't be considered employer-employee relationship since there was no contract of service. However, if you created a contract, it does come under this head. But for an internship, we generally don't sign a contract. That's why it doesn't come under employer-employee relationship. The second point is due or receipt basis. You need to be very careful about this. So, for example, you're working for the month of March 18, and your salary is falling due on 31st March 18. In that case, it will be taxed in the same month because it was due as well as received on the 31st of March. However, if your company's policy is the salary of every month is due on the first of the next month, then it will be since it will be due on the first and it will be received on the first, it will be taxed in the next year, that is April 18. However, if your salary is due on the first of next month, but you're receiving it on the 31st of March, it will be taxed on the 31st of March and not on 1st of April. So these 2 points are extremely important in order to figure out what should be considered as salary. Second is salary. Now this is a point which I considered important to cover was judges. What judges receive as their remuneration will come under salary income and not income from other sources. But as we go on in this video, we'll understand that judges have a lot of privileges since most of their allowances and salary income is exempt from tax. Now MPs, unlike judges, MPs, the remuneration received by MPs is not salaries, it comes under the head income from other sources. So let's proceed. So now we talk about the components of salary. You have basic, commission, bonus, allowances, perquisites, provident fund, retirement benefits, profits in lieu of salary, advance salary and arrears of salary. So once we cover all these topics, we'll actually be done with salary. These are called the 10 emoluments of salary. Each of them have a basis of calculation. So when you're writing your answer, each of them will be working notes, and this, what I've written, the computation of salary, will be your main answer. So we'll go ahead and I'll tell you about each of the components. So allowances, I'm going to be starting with allowances. So the allowances are divided into 3. Fully taxable, partly taxable and fully exempt. Fully taxable allowances like dearness allowance, medical allowance or any other allowance which aren't covered in partly and fully exempt are taxable and under fully taxable. Partly taxable, this is important. First comes HRA or house rent allowance. Next comes children education allowance and transport. But be careful, transport allowance is no longer partly exempt, it's fully taxable. However, for the handicap, it is partly exempt. So be careful, transport allowance again is not partly exempt for everyone, it's only partly exempt for the handicap. Third one is fully exempt, which is foreign allowance, allowances to judges and from the UNO. Foreign allowance in the sense, an Indian citizen who is working abroad and is getting allowances from the government, it's exempt from tax. Any allowances provided to High Court or Supreme Court judges is exempt from tax. And any allowance received from the UNO is also exempt from tax. So I'll be concentrating more on partly taxable because those are the rules which have been made by the government. So I'll be focusing on these. So as I told you, I'll be stressing on partly exempt allowances. The first one and the most important is HRA. Now before we get into the computation, let's see whom it's exempt for. It's fully exempt for High Court and Supreme Court judges. So no matter what HRA they are getting, it is still fully exempt for them. It's fully taxable if you're living in your own house, but your employer is still giving you an HRA. Or it's if you're not paying rent, that is if you're living with your parents or living with your relative, you're still getting HRA, there is no exemption partially, so it's fully taxable in these 2 cases. Now let's get into the computation. It's a very simple table. If you get this table right, you'll get your HRA calculation right. So how does it go? Actual HRA, that is how much ever your employer is giving you, will be put in the outer column. Now, out of the actual that you're receiving, the amount of exempt will be least of these three conditions. Now, what is the first condition? First condition is actual HRA. So you put it in the inner column. This amount and this amount will be the same. Second, rent paid minus 10% of salary. Let's be patient, we'll understand what is salary later. So how much of a rent you're paying minus 10% of that will be put over here, and third condition is 40% or 50% of salary. 40% in all other cases and 50% in case of metro cities. Now which are the metro cities? They are Delhi, Kolkata, Chennai and Mumbai. So these four. If the employee is earning his income in metro cities, it will be 50% of salary. In all other cases, it will be 40% of salary. Now, after these three calculations, we come up to a figure. We'll see which is the least of these three, and we'll put it in the outer column. Now, we got actual HRA and we got the least of these three. The difference between these two will be your taxable HRA. Now, what is salary for HRA? Be careful. Salary for every calculation of salary for every head will be different, like every emolument. The 10 heads which I showed you, not heads, I mean the components of salary, it will be different for everyone, so you need to be careful. So for HRA, what is the computation of salary? It's basic plus DAF plus commission if. Now what is DAF? If in the question they mention that dearness allowance is entering into terms of contract, or it's entering, being a part of retirement benefits, it becomes DAF. So for example, if DA is equal to 100, but DAF is 50% of that, so you will consider only rupees 50 and not rupees 100 for the calculation of salary for HRA. So be careful, which are the two things? DAF is which enters into retirement benefits or forms a part of the contract. Now what is, so you got basic, you got DAF. Now commission if. What is commission if? Out of the entire amount of commission, say it's rupees 100. Out of that, if it's forming a part of, if you're getting a percentage of the turnover as a commission, then it forms a part of commission if. That commission you will be adding to your salary for the calculation of HRA. In case there is no such condition mentioned in the question, if they simply mention DA, you cannot add it to salary. Only if they mention that it's being a part of the turnover, or if they are telling that DA forms a part of terms of contract or retirement benefits, only then it should be added to salary. So I think we are done with HRA. So apart from HRA, these are the other partly exempt allowances that we are getting. So how is the children education allowance? You need to remember it's restricted to 2 children. So irrespective of how many kids a person has, it will be restricted to 2 children. If he has 4 children, he can't claim 100 per month into 4. Even if he has 3, 4, 5, it will be restricted to 2. Now for example, this comes in, let's calculate, 100 into 2 is 200 into 12, so that's 2400. So this is the maximum amount of exemption that he can avail. Now suppose he is receiving 1000. We do this minus this, we get minus 1400, which is not allowed. Hence, the least of both. If this is a smaller figure, of course you will get this as your exemption. However, if this amount is lesser than this amount, you can't claim excess exemption. And the same applies for all the 3 cases. The second one is children hostel allowance. That it's the same computation that is actual received. The amount of exemption is 300 per month into 2 children. Again this is restricted to 2 children. You can't claim for more than 2 children, irrespective of how many children you have. The third one is transport allowance. Again, I'll stress on this. It's not for everyone else. It's only for the handicapped. Because now in this year, standard deduction has been introduced, which will be discussed later. But there's no transport allowance for everyone, it's only for the handicapped. So by chance they ask you in the question, if they mention that the person is getting transport allowance, but he is not a handicapped, then it will be fully taxable, it will not be exempt. And the maximum amount of exemption a handicapped person can claim for transport allowance is 3,200 per month, not per year. So the next component is Provident Fund. First, let's understand what is Provident Fund. It's basically the basic idea behind Provident Fund is to encourage savings. So the government has introduced various kind of Provident Fund funds for employees to encourage savings. So a fixed amount of their salary gets credited to Provident Fund, for which they get many benefits. Of course, they get a lump sum as well at the end of their whenever they want to withdraw from it. Now, which are the kind of Provident Fund? There's Statutory Provident Fund, which is compulsory. Recognized Provident Fund. Now, this is the most beneficial, and this is the one which we are going to stress on. Next is Public Provident Fund. In this case, the employer doesn't contribute anything, only the employee contributes. So it's like a voluntary choice for the employee to contribute if they want to. Now we'll get into the details later. There's one more Provident Fund called Unrecognized Provident Fund. For such a Provident Fund, there are no benefits. So most of the people don't even opt for it. So Statutory Provident Fund is quite easy. Whatever the employer is contributing. Now you need to understand one thing, that even if the employer is contributing, it will be considered as our income, because otherwise he wouldn't have expensed it. If it wasn't for the employee, he wouldn't have even incurred that expenditure. Hence, that employer, whatever he is contributing, will be considered our income. But then, if that employer is contributing to a statutory provident fund, whatever he is contributing won't be taxable for us. It will be absolutely exempt. Whatever we as an employee are contributing can be claimed as a deduction. We'll come across that in later videos, which are called deductions under chapter 6a. But let's not focus on that right now. Interest. Now, what is the interest that we're getting? We're not getting on how much the employer or employee are contributing every year. Interest is credited on how much the balance the Provident Fund has. So even that interest that is being credited to us, which is getting contributed to statutory Provident Fund, will be fully exempt. So will the lump sum. RPF. RPF is Recognized Provident Fund. As I told, this is the most beneficial apart from statutory Provident Fund. Employer. Now whatever the employer is contributing, it doesn't matter how much ever he contributes, but if he is contributing more than 12% of your salary, it will be taxable. Suppose your salary is 1 lakh and he is contributing 18%. So you're getting the Provident Fund is 18,000. However, only 12,000, that is 12%, will be exempt. After that, beyond 12% will be taxable. The second one is what we are contributing. What we are contributing is nothing but an application of income. It's claimed as you can claim it as a deduction. Again, let's not stress on it. It's not going to come here. It's going to come in the future videos. Interest. Interest, again, as I told you, it's on the balance of whatever is lying in our Provident Fund. That beyond 9.5% will be taxable. Now suppose your Provident Fund is giving you an interest of say 12% on the balance. Beyond 9.5%, how much ever the amount is you're receiving as interest will be taxable. Up to 9.5% it's exempt. Now at the end of it, when you want to withdraw it and you get your lump sum, if it is an RPF, that is Recognized Provident Fund, it will be fully exempt. Now Public Provident Fund, that is not, as I told you, it's a voluntary contribution. It's an open Provident Fund where the employer never contributes. The employee, whatever he contributes, he can claim as a deduction, and the interest that he is getting is exempt, and the lump sum is also exempt. Now since RPF is the most important, we'll solve a sum on that. Let's talk about, so this is the question. He's receiving a basic salary of 4,80,000 per year. He's receiving commission if. So if it's commission if, it's forming up, the commission is based on the turnover. He's getting 1,36,000. The employer is contributing 13% of his salary. So he's contributing 13% of 4,80,000 plus 1,36,000. And that he's getting 80,080. So this is the amount that the employer is contributing. Interest he's receiving 12% on the balance. However, as we learned, you can't claim more than beyond 9.5% is exempt, but he is contributing 12%. So let's see what happens. First, you need to put the employer's contribution. You're getting it as 80,080, which we got by adding up these two, into 13%, what he is actually contributing. However, this 1% that he's contributing extra cannot be taken as deduction. Sorry, I forgot. Salary, for the sake of this 12% will be basic plus DAF plus commission if, which is same as HRA. So we take the same here. Since the question it mentions commission if, we can take the entire amount. Hence, we add up these two amounts, we calculate 12%, and only that much will be exempt. Hence, it's being deducted, and the remaining will be taxable. The next one is interest that is being credited. He's getting 12%. So now, since 12% is 64,000, we need to calculate how much is 9.5%, and that's what we are doing. We are cross multiplying. If 64,000 is 12%, 9%, I'll write it here. Will be what? And hence, when we are multiplying this into this and dividing it by this, and we are getting how much it would be if it would be 9.5%, which is 50,667. When we take the difference, the amount is beyond 9.5%, that is, this amount will be taxable, and when we add up, we get the total amount. Thank you, and all the documents for this video will be put on the link.